It's time for the Trading Stocks Made Easy podcast. Each week, Trading Stocks Made Easy demystifies stock trading and investing so you can profit big. And now, here's the host of Trading Stocks Made Easy, the wealthy investor, Tyrone Jackson.
Thank you for joining me once again. This is episode 10. And today I'm going to talk to you about strategies and WITradeschool.com. Strategies and WITradeschool.com. Welcome to Trading Stocks Made Easy. Tyrone Jackson, a wealthy investor. I'm going to try to answer some of the questions that I get most frequently when I'm out and about or doing live events or on some of our teleseminars. And I'm going to try to answer them for you in this particular episode. You know, Trading Stocks Made Easy is the show that really tries to demystify the stock market so that you can profit big. One of the things that people struggle with is terminology. Now, if you're going to learn how to trade a stock, buy and sell it pretty quickly, or you're going to learn how to invest, how to buy stocks and when to buy more, how to set up an online brokerage account, one of the things that you're going to have to learn is the language of the stock market and some of the finer points of how to trade and how to invest. So in this particular episode, not only am I going to answer some questions that I get frequently, I'm going to introduce you to some of the language that has been hidden for so long that I try to, again, demystify and actually bring it to you so that it can help you so that you won't be intimidated by the stock market, but you'll become familiar with the money language. So more on those topics right after this break.
You're listening to the Trading Stocks Made Easy podcast. Want to learn more about how to trade and invest in the stock market? Visit thewealthyinvestor.net/products. That's thewealthyinvestor.net/products and order the Wealthy Investor's Guide to Stock Market Success audio series. This easy-to-follow 5-CD audio series and manual will teach you the basics of how to buy and sell stocks, how to collect quarterly dividends for life, plus hidden income generating strategies like covered call writing and volatility trading. Start creating financial freedom right now. Get the financial education you need to get ahead. Visit thewealthyinvestor.net/products.
Wealthy Investor, Wealthy Investor, WealthyInvestorRadio.com.
So welcome back. And happy to have you here. Let's see if we can get into this idea of some of the language that's used in the stock market. Now, the first trade that I always teach people, remember there's a difference between trading a stock and investing in a stock. Actually, we'll start off with investing. Now, one of the first ideas that you need to know about investing is that when we're investing in a company, we're willing to hold those shares for the long term. Now, in the Wealthy Investor Program, we tend to trade stocks that are members of the Dow Jones Industrial Average and the S&P 500. So what does that mean? What is the Dow Jones Industrial Average? Well, it's this index or this way of keeping track of the top 30 stocks in the U.S. stock market. There are names that you've come to know, companies like IBM, McDonald's, Verizon, AT&T, and the Walt Disney Company, right? So these are companies whose stock prices are probably not going to zero. You've heard me talk about this on the show before because they have something called top-line revenue, right? And what that means is that's the company's gross earnings over a period of time. Now, top-line revenue can be assessed on a quarterly basis, once every 3 months, or on an annual basis. How much money did the company make overall over a 12-month period? So we like to trade and invest in companies whose revenue keeps rising both on a quarterly basis and on an annual basis. So you see, stock market investing is really not about guessing and wondering which company's stock is going to go higher. We're following an established pattern. Now, in the Wealthy Investor Program, we refer to these companies as good dates. We're not there to fall in love, fawn over the stock price, get emotionally involved. We're just on a date. And when you're on a date, you're getting to know a company. Well, from my approach in the stock market, you could be on a date for 5 years, 7 years, maybe even 15 years in the stock market, but you're not there to get emotionally involved. You're there to keep your money growing in a company that has its top line revenue growing. Does that make sense? Okay, so when we're investing in a company, one of the things that we want to look for is something called a dividend. Now, what is a dividend? A dividend is your share of the company's profits. You get this dividend as a shareholder every quarter. Most stocks pay a quarterly dividend after they've paid all their bills, their employees, their expenses. You get this dividend. Now, dividends are very powerful because the more shares you own, the greater your dividends. I always have my students, if you have an online brokerage account, which allows you to buy stocks, I always say to my students, have your dividend checks at the end of every quarter mailed to you because those checks are a form of residual income. Now, a lot of people say, this is a little controversial. Some people say, no, Tyrone, I want my dividends redeposited back into my brokerage account so I could buy more shares. But what I have discovered as a teacher and investor is that most people will take those dividend checks and they'll go out and they'll buy silly stocks outside of the Dow Jones and outside of the S&P 500, which basically is a bad habit. See, wealth is a series of positive habits, so we want to do the same things over and over and over and over. But those dividend checks, if you spend them or put them in your savings account, guess what? They start this habit of investing to get your dividend checks larger and larger and larger, which means that you're buying more shares. So where do you buy more shares? You buy more shares from your deposits that you're putting into your brokerage account. You see, all wealth needs a plan. And if you're not depositing money into an online brokerage account, into investments on a monthly basis, it's hard to build wealth and financial freedom. But if you're depositing money into a brokerage account and they're going into dividend-paying stocks, you're getting paid to invest. And that is a very, very, very important concept. So 2 stocks I want to discuss here. Each one pays a dividend. Each one is part of the Dow Jones Industrial Average. Now, I'm not telling you need to go out and buy these 2 stocks right now, right away, because that's not necessarily so. But they are stocks in this particular market that I do like, and I want to explain them to you. The first one is AT&T. Now, you remember, maybe for those of you who know, about 30 years ago, there was just the phone company. Do you remember when it was just one phone company and you went and paid your bill to the phone company? Well, today, because of technology, there's not just one phone company. There are wireless companies that deliver a vast array of services, and AT&T is one of them. Now, AT&T was just dropped from the Dow Jones Industrial Average, but it's still a member of the S&P 500. What I like about AT&T more than anything else is that the stock pays a very handsome dividend. At the time of this recording, that dividend is 47 cents a share. Now, the other things that I love about AT&T is that its dividend has a tendency to rise over time. You see, the dividend wasn't always 47 cents a share, a form of residual income. There was a time when it was only 40 cents or 35 cents. So if I keep holding on to these shares in a company that's making billions and billions and billions of dollars in all this new technology, I'm still dating the stock, but I'm getting paid in the form of a dividend. There's another stock that's a company like Walt Disney Company. Now, I like Walt Disney. It pays an annual dividend of $1.15. So I'm only going to get my dividend there once per year. But I like the stock because it has a tendency to rise over a 5-year period. This is not a stock that I am trading, jumping in and out of. I am investing in this company. And one of the reasons that I like them as an investment is because Disney is in everything. They're in the real estate business. Did you know that Disney's in the real estate business? Well, you think about the acres and acres and acres of land that all of their theme parks are on. That is real estate. They also charge admission to the theme park, so we get ticket sales. They also produce major motion pictures like Frozen and now Star Wars and the Marvel comic series, and they're making billions and billions of dollars off of ticket sales. But the most important thing is what? Is merchandising. So when you see a movie like Frozen, how many lunch boxes did they sell? How many t-shirts did they sell? How many bed sheets did they sell? That's all merchandising, all in the form of residual income, to the tune of billions and billions of dollars. So would I like investing in a company like that? Yes. Not only because the stock has a tendency to rise because that top line revenue continues to rise, but also because Disney pays a dividend, and it's a story that I understand. What is the story of a stock? Well, it's exactly what I just explained to you, how the company makes its money. So these are companies that I like investing in. And when we come back from this break, I'm going to talk to you about trading a stock, buying it and quickly selling it.
You're listening to the Trading Stocks Made Easy podcast. Want to learn more about how to trade and invest in the stock market? Visit thewealthyinvestor.net/products. That's thewealthyinvestor.net/products and order the Wealthy Investor's Guide to Stock Market Success audio series. This easy to follow 5-CD audio series and manual will teach you the basics of how to buy and sell stocks, how to collect quarterly dividends for life, plus hidden income generating strategies like covered call writing and volatility trading. Start creating financial freedom right now. Get the financial education you need to get ahead. Visit thewealthyinvestor.net/products.
Wealthy Investor, Wealthy Investor, wealthyinvestorradio.com.
And welcome back to Trading Stocks Made Easy. And I'm talking to you about Wealthy Investor Trade School, WITradeschool.com, which I'm going to get to in a moment, where you can see and follow all of the stocks that I actively trade, where you can see and follow all of the stocks that I actively trade and invest. And you get to see how to make money every single week at WITradeschool.com. Now, let's get back into this notion of trading a stock. So anytime I buy a stock specifically with the intention of selling it at a profit, that's called a trade. An investment I'm willing to hold on to for a number of years to get something like a dividend, which is what I talked about before the break. In a trade, I could be buying a stock, and I always use my favorite stock in the stock market as an illustration of this, and every stock has a ticker symbol, and this particular stock's ticker symbol is XYZ. Now, I love XYZ stock. Why? Because it goes up when I need it to go up, and it goes down when I need it to go down. So let's say I was going to buy 100 shares of XYZ at $49. And my intention was to sell it when those shares reached $50. See, that would be a trade. Well, how do I tell the software inside my brokerage account to actually sell that stock when it gets to $50? I'm going to put in something called a sell order. Now, depending upon what trading platform you're on, there are different ways to execute this sell order, but I simply buy the shares at $49 and put in this sell order. It's totally programmable, usually for about 90 days. And the second that stock hits $50 a share, it's going to sell. So that's an easy trade, right? I bought something with the intention of selling it. XYZ stock at $49, and I want to sell it at $50. That's a trade. The other trade in the stock market that I teach all of my students first, because this produces income, is something called a covered call. A covered call. Now I'm going to go back to XYZ stock, buy it at $49, and I'm willing to sell it at $50, but I'm going to make some money in between. You see, instead of buying the stock and just waiting for it to rise, I'm going to sell an option to someone else I don't know to buy the stock away from me at $50. Now, the number one question that comes up are, who are these people and why are they willing to do that? Well, that's another story for another time, but we can make a lot of money selling rights or options to stocks that we've just purchased. So if I bought 100 shares of XYZ stock and I sold the right to someone to buy the stock away from me at $50, that $50 is called the strike price. Talking about learning the money language here. When I sell an option, I bought the stock at $49 and I'm willing to sell it at $50. I'm willing to sell it at the $50 strike price. My goal is to try to get $1 for selling this option. Well, what does that mean? If I have 100 shares, I'm willing to sell it to someone at a higher price for $50, and I can get $1 for selling that right on 100 shares. I just made $100. On 1,000 shares, I can pull in $1,000. And on 2,500 shares, I make $2,500 for doing what? Just selling the right. And if you're a regular listener to Trading Stocks Made Easy, this is the first trade that I teach all of my students, because most people need to learn how to produce more residual income for themselves on a regular and consistent basis. So let's go through this again. Bought the stock at $49, perfectly willing to sell it at $50. The $50 that I'm actually going to sell the stock at, that's called the strike price. Now, let's combine two strategies. What if I knew that there was a stock that was about to pay a dividend, and instead of just selling the stock, I bought it and sold a covered call? I take in the money for selling the right, which is also known as the call option premium, and I could capture the dividend at the same time. You see, I just made money two ways from that same stock. Now, a lot of people think that you have to sit at a computer all day long to figure these trades out. Actually, covered call writing, this process of selling rights to other people, that really only takes about 3 minutes when you get good. And the money that you generate is called the call option premium, and that hits your account in what we call T+1, trading day +1. So what are we talking about here in this particular episode? How to cover call right, sell options, and how to collect dividends. Now, the number one question that I get is, Tyrone, what stock should I be trading and what stock should I be investing in right now? Well, that's why I created Wealthy Investor Trade School, or witradeschool.com, so that you can join, you can become a member. And since the stock market is always changing, what does that mean? The stocks that we're investing in and the stocks that we're trading are always changing. And as a witradeschool.com member, you're able to keep up with me week by week by week. Now, what if you didn't understand what a cover call is? Maybe you need to subscribe to witradeschool.com and just watch the video tutorials. That's because witradeschool.com is what? It is a membership-based website that is 80% video. And why did I do that? Because repetition is the key to success. And one of the other unique features about witradeschool.com is every week I take your questions. So if you need help opening a brokerage account, if you have questions about dividends, about selling covered calls, see, because the covered calls really comes in what we call 3 different flavors: in the money, at the money, and out of the money. And guess what? Every single week at witradeschool.com, I share that with you in the video form. You see, trading stocks and investing really is not complicated. What you need is a guide and a financial education. And what I provide you is both at witradeschool.com. So does that mean that you have to run right out and buy all my recommendations in the stocks that me and my students are trading? No. But we do know one thing: those stocks are in a lower risk category because they're members of the Dow Jones and the S&P 500. And that's why this program is called Trading Stocks Made Easy, because for those of you who are into things like technical analysis and Fibonacci lines and MACD, those are all great tools if you're active day traders. But if you have a full-time job and you want to ease into the world of trading, your next step is to do what? Go to witradeschool.com. You get even a reduced membership for the first 30 days to go in and see if you like it. And then that way, you and I can start working together. Now, one final note that I think is really important. A lot of people try to learn about investing by listening to this show or other shows and watching YouTube videos, and then they think, aha, I'll get it all piecemeal or for free. Or I'll try to get it on the cheap. Do you realize it's really hard to string together a multitude of strategies and how to use them if you have no interaction with the instructor at all, or if you're trying to learn someone else's trading method and you can never ask them questions? That's, again, why I created witradeschool.com, because it's that perfect blend. No matter your level of understanding, you can get in the game. And why is Bill Gates a billionaire? Because he owns hundreds of millions of shares of Microsoft, right? So you look at anybody who's really, really wealthy in our society, they all own shares in something in the stock market that have a tendency to rise. So your next step is to take an action today, right now. Don't wait for something grand to happen, because something grand is happening for you right now. Join me at witradeschool.com right now. Get your reduced membership. Get to watch all of the videos there and learn the language of the wealth game in the stock market so that you can change your life. Not only can you start investing for yourself, you can start investing for your children. So a lot of people say, I want to be rich. Yeah, but part of our responsibility of being rich is helping other people, helping our kids, family, community, and the people that we love. So learning the language in the stock market, very, very important. Thank you for joining me for this episode of Trading Stocks Made Easy, learning the language of the stock market and learning how to trade and invest for dividends, using covered calls, and all of the great stuff that's out there, things that you can't even imagine in the world of trading and investing that you are capable of achieving part-time and full-time. But the most important thing is that you take an action and start building wealth right now. I'm Tyrone Jackson. Thank you for listening to this episode of Trading Stocks Made Easy, and I wish you peace of mind, financial success, and a millionaire mindset. See you soon.
You've been listening to the Trading Stocks Made Easy podcast. Be sure to rate and review our show on iTunes. While you're on iTunes, be sure to click the subscribe button and you'll automatically receive our next episode.